The S&P 500 is sitting at very critical resistance, and we're getting a little too far overextended in the short term. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Very quickly, I'm extending the Memorial Day sale for this week as well, so if you still want to claim 50% off the Stocks Channel Trading Discord community or Bank Trade Alerts, you can find out how to do that by clicking on the links in the description of this video. Alright, so today's SPY was down 0.19%, and intraday, we hit that price target dead on the money just below SPY 430, and then we were getting a little too far extended outside the upper Bollinger Band and started to see profit taking. Now this is exactly where we were expecting SPY to go, and I talked about this last week that SPY above 417 was breaking out and going to short squeeze towards 430. However, now that we're at 430, we need to be very defensive and bulls need to lock profits because you can always get more bullish on a break above resistance. Remember, I always teach you to take your profits at resistance because that's where people are going to sell and lock profit, and we could see bears stepping in and trying to short the market lower. So be defensive and risk off with this overextended condition hitting critical resistance. And yes, we can go higher while we have a bull trend. Just be cautious here until we get a confirmation of a break of resistance. So we need to break SPY 430, and then it's going to be blue skies all the way up into the 440s. But we need patience and we need confirmation of a price action breakout. Now to the downside, we have a gap to fill below right around 423, so it is very likely we are going to cool down and come back down and do a little bit of backfilling and getting rid of this overextended condition before we go any higher. Now that doesn't guarantee we can't go higher. You can always go higher, and there's no rules saying overextensions can't continue to overextend more. However, it's just very unlikely, so play the odds and get a little more defensive here at critical resistance. So watch downside support right around 425 to 423, and then critical support is still going to be 417, and you can also use the risk level at 420. On the NASDAQ 100 triple Qs, we were up 0.07% today, so we went absolutely nowhere. And intraday, we were continuing to push higher towards 360, and I'm still calling this the bear cave between 350 and 360. Meaning there's a very good chance the bears are at this level waiting to drive prices lower. Now there is a ton of bullish momentum, and these things don't roll over and die overnight, so it's going to take a little bit of price action confirmation to show that we're rolling over, and that confirmation now is going to be the breakdown below 347. So 347 is a very critical support for the very short term to tell us this bull trend is rolling over. And then once we break below 347, I think we'll start accelerating lower towards 337 and the gap fill at 333. However, price action must confirm we are rolling over. We can't guess. And I still think this is a great area to lock in profits. And then once we get confirmation we're rolling over and we break critical support, you can even set up low risk short trades to lower prices. But if you're shorting right now without any confirmation, you need to use that risk level up there at 360. Remember, this is a bull trend, and bull trends push price action higher. So if you're going to short the triple Qs because you think they can't go any higher, keep in mind people have been saying that all year long at all of these prices below, yet we've continued to go higher anyway. So when you're in a bull trend, prices go higher. So don't short just for the hell of it. Make sure you have a trade plan that's following price action and you have a very disciplined risk management strategy. Now I do think this went a little too far parabolic and went a little too far too fast, which usually means once we do roll over, we will see the elevator down. So I still think there's a very good chance June is weak for the big tech sector, and I did talk about that in the end of May. On the Dow Jones, we were down 0.57% today, and the Dow Jones is looking like they're getting the bull breakout above 336, which is now the critical support level you need to pay attention to. So to make this chart easier to read, we'll move that old level from 334 because right now I think 336 is the only level you need to pay attention to. If we break below 336, we're likely coming all the way back down to 333, and you can stay bullish above these critical support levels because we are getting an impulsive bounce off of the 200 daily moving average. So your risk level as bulls was 327, and I would now move that up to 333 or 336. The next upside resistance will be 341 and then 346. On the Russell 2000 IWM ETF, we were down 1.34% today, and we did close the gap at 181 on Friday, and we were way outside that upper Bollinger Band, so we did get a pullback back down towards the 200 daily moving average. So there is going to be some critical support tested right here at 180. The bull breakout, however, is above 178 and this risk level at 176. So you have a lot of support between 176 and 180. So right now on the IWM, you need to wait a few more days to see if we're going to break back over that 200 daily moving average. And if we do, we're likely going to start climbing back higher towards the high 180s. So watch that critical support at 176. And if we break down below it, you're looking for support at 173 and then this critical support at 170. On the ARKK ETF, we were up 1.06% today, and we're getting that bull breakout above 41.5. So if we can start closing above this level, we are very likely going back towards these highs in the mid 40s. So you can get more bullish on ARKK with the risk level at this support right around 40 or 41. And you can see the bull trend is now developing with all of these moving averages starting to stack to the bullish direction. On the VIX, we were up 0.75% today, and the VIX did hit the target at 15, which is telling us we are very likely going to continue in this bull trend. However, the VIX is still going to see spikes during pullbacks, and that range is really going to be between 15 and 18 as long as we're in the bull trend. And we're not getting bearish at the bears returning until the VIX starts closing out above 20. On Bitcoin, we're currently down about 5.3%, and Bitcoin is getting some high volume selling as it breaks down through that critical support at 27,000. And keep in mind, this is coming from that lower high rejection from 28,000. I still have my price target down here at 24,000 and the rising 200 daily moving average at 23,000. On Amazon stock, we were up 0.85% today, and we fully closed that gap at 125 on Friday. And if we're going to continue higher, our next price target will be 128. You could stay bullish above the 120 support, and if we break below that, we're likely coming back down towards 117 or this support zone right around 114. On Tesla stock, we were up 1.7% today, and Tesla is getting the bull breakout many days back over the 200 daily moving average and developing the bull trend ever since we broke back over 197, and now we have another bull breakout with the break back over 215. Above 215, we're likely going to 230, and then this gap fill up here at 260. So we are looking a lot more bullish in Tesla stock with this breakout above 215. Keep in mind, above 215, we have a higher low into a higher high. So this bull still has a lot more upside as long as we can hold above this support zone. Could also use this risk level at support at 208 and the 200 daily moving average right around 200. On Apple stock, we were down 0.76% today, and Apple hit a brand new all-time high intraday, but was outside that upper Bollinger Band by a mile. And hitting all-time highs that overextended is due for profit taking and selling, and that is exactly what we saw today. This was very high volume, so without a doubt there were a lot of sellers taking profit in this stock, and it has been on a very powerful bull run, so that is not surprising. To the downside, we'll be looking for gap fills below 176 and 167, but we need confirmation this bull trend is rolling over and dying, which is going to require a close down below 170 to get to the gap fill at 167, or a close down below support at 177 to fully close the gap just above 175. Remember, this is a bull trend, which means we can continue to push to brand new all-time highs, but we're likely coming down towards this support and this gap fill before we go any higher. On the financials, we were down 0.52% today, finding resistance right around 33, and we need the break of 33 to get more bullish, and we're just a few days away from getting that confirmation. We just need to wait until the price action proves it. On the industrials, we were down 0.69% today, closing outside the upper Bollinger Band on Friday, so really just getting a pullback, and we're still in this range between 97 and 101, and we're getting more bullish if we start breaking out above 101.5. The healthcare sector was up 0.36% today, coming into this resistance that we were looking for at 131, and this was the dead cat bounce we were looking for from this overextended condition back to resistance. Now, to get more bullish, we need to hold above this level as support, otherwise this will be another lower high before the next lower low. On the energy sector, we were down 0.66%, getting rejected from that negative 50 EMA, and I still think there's a good chance we're going to get rejected from resistance and go close the gap at 73, which will make this look like a double top rejection on a break below 76. So jumping back over to the S&P 500, without a doubt, this is very critical resistance, and this is the exact price target we were looking for, so it's time to be patient and be disciplined and let price action tell us what it wants to do next. On a break above 430, we're continuing the bull trend and we're going into the 440s and 450s, but a rejection from here could send us all the way back to some of the gap fills below. So be disciplined, have a trade plan prepared for either scenario, and then simply let the price action do all the talking. Don't forget to take advantage of the extended Memorial Day sale where you can get 50% off your first month of bank trade alerts or the Stocks Channel Discord. You can find out how to claim that discount by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.